There traders, this is Steve Miley, the market chartist on behalf of forextraders.com, and we're now looking here at the Australian dollar, US dollar and the New Zealand dollar, US dollar. Definitely a changing sentiment in here in early December as we've had this general broader move to a risk-off scenario. Concerns about the fragility of the trade war truce between the US and China has seen riskier assets selling off, led by the equity markets breaking down, but in the FX space, that means the risk currencies, in the majors, that's the Australian dollar, New Zealand dollar, Canadian dollar, all selling off in here versus the US dollar, seeing significant pushes lower. And this Australian dollar, US dollar sell-off we've seen, rejecting this late November push higher. Remember this late November push higher being helped higher both by strong Australian data, plus the fact that we had a more dovish tone from Jerome Powell driving the AUD USD higher. But we've had this significant sell-off with this move back to a risk-off scenario. We took out this support low in here from late November at 71.97. That was enough to shift the intermediate term outlook from bullish back to neutral, and real risk now for a challenge down here to 71.61, which would then see the intermediate term outlook into December to shift negative. So certainly a more negative tone there. Not so negative for the New Zealand dollar, but nevertheless early December has seen a setback and the bullish theme has been damaged here, challenging this trend line support that comes up from late October. And there's real threat now with fields for a continued immediate push lower, and should we surrender 67.51 here, it would signal a small topping pattern and shift the intermediate term outlook from bullish back to neutral. So downside pressures remaining for both Aussie dollar and New Zealand dollar versus US dollar through into mid-December. This has been Steve Miley, market chartist for forextraders.com, and I wish you a great trading week.